Alright, welcome back guys. It is the start of a new week and it is a very important week because in just 2 days on Wednesday we're having the big FOMC meeting where they were actually going to pivot and start cutting rates. Historically, when the Fed cuts rates, it's not bullish for the markets. They are cutting to stimulate the economy because the economy is broken, especially because inflation is hot right now. They don't really want to cut. Cutting is not good for the US dollar, so the fact they are cutting means there is something wrong they have to fix, and it might not signal the best thing for the markets. But I do have to say, while there are a lot of possibilities out there, and I'm not rolling out the scenario of entering a recession sooner rather than later, I do think it's going to be more of 2025 when we do see these recessionary fears actually come to fruition. I think throughout election season here in the United States, throughout the fall season when markets are seasonally the most bullish, we are going to see a big burst of euphoria, get everybody to buy back in at the top before we do enter hard times. I think there's still a lot of bears out there, and when I see a lot of bearish sentiment still in the markets, I can't necessarily join them, especially because we do have unemployment coming down. So we still have to watch this economic data that we are getting from the Fed. We'll see what they say on Wednesday in the FOMC meeting. They should only cut by 25 basis points as well, which is not anything too concerning. If they were doing a steeper cut than you would expect, could be a bit more of a warning sign, but seems like they're easing into it. And the charts overall, especially outside of Bitcoin, altcoin market as well as traditional finance, looks really well, shaping up to go into a bit of a parabola here. So enough of me just talking, let's get into some of these charts. First off here, we got Bitcoin having a bit of a pullback on the day. Is this anything too concerning to worry about? We'll put in the levels here on the chart. Was this just a retracement and we're going to fall below and then head into the bear market? Or is this going to be a bullish backtest of volume, which you can see right now here on the chart? We're backtesting this point of control. We're back within the low end range, testing the point of control after breaking out to the upside. That's definitely something that's kind of expected to happen, right? On your uptrends, you like to just hold the Fibonacci golden pocket, right? That's kind of your last line of support. Holding the 382 is the most bullish level to hold, and you can see this 382 comes right within these points of control. So this makes a lot of sense to have a pullback to this level after rejecting the golden pocket to the upside. So you can see here, swing high, swing low. Right around that 618 is where we rejected. Coming back down to test 382 now. That structurally looks pretty good, especially if we can hold this. Let's see if we can get back above where this golden pocket was. Flip that into support to then have a very high probability of clearing not only these highs and these highs, but going up and grabbing this liquidity up at all-time highs, which I have continued to state is my targets for the market right now. I don't know what's going to happen when we get up there, right? If I think the Fed cut is going to mark around where the top comes in, then maybe we get some sort of distribution up there and we don't go much higher than $78,000, but I am expecting that to get grabbed during the next coming months. So we'll see how this plays out. We talked about some RSI divs in not yesterday's video, but actually on Saturday. I missed yesterday's video, so apologies for that. Just been real busy lately. But yeah, we jump in here to the shorter term time frames. We're on the hourly now, and you can see lower lows on price and then higher lows on the RSI. We got some regular bullish divergences coming in here on the price action. Very nice sign to see. Hourly bullish into big supportive level. That's a nice confluence to see, and these are some good lows on the chart. You can see, grabbing liquidity here, looking structurally very nice. Could this be it? And then we go ahead and march on up. Definitely could be, but we do have one more level to the downside, right? We're at a big volume level, which is the most important level on the chart. Holding volume would make the most sense, but we have been talking about this CME gap. If I just remove all of these indicators so it's easier to see, we'll go ahead and just draw out a box. You can see this gap from all the way down to around $53,000. So definitely could come all the way down to test this for sure. That wouldn't be too surprising to see, although I would say if we do come down here, probably going to see a bit of a liquidity grab because that's not exactly a bullish retracement, right? When you just do a bullish retracement, you want to be holding above this kind of golden pocket region. So, getting all the way down to this like 886, most of the times that happens, you do get structures like this to form. So I would be watching out for something like this if we do go ahead and hunt down lower. But so far, I don't really have anything to suggest that would happen. I do kind of think there's a higher chance that the low is already put in, as I stated in my last video, saying, hey, this price action kind of tells me that there's too much buying pressure and that it's going to move away from this price. But we'll see with the FOMC volatility Wednesday. Don't be surprised at all if we do sweep the lows down here at around 50 to 500, we could definitely grab liquidity below that level during that big volatile news event. I would say neither the highs or lows are safe. I would expect some pretty crazy volatility, just grabbing liquidity from all sides. Who really knows exactly what's going to happen? You cannot predict these events very well, which is why you don't trade during FOMC volatility day, but you can trade leading up to it if you do see good confluences. But yeah, I think that's enough for the Bitcoin price action. You can see we're holding support very nice. We have some bullish confluences as well, and the base case remains the same. Let's go over here to our traditional finance markets though. Got a nice daily close above value area high, and I would expect at this point that we can get into all-time highs, but we'll see. If this Fed cut is going to mark the top, there's always the case. Big money is protecting their liquidity. Smart money does not want that to get grabbed, and we could head on down into the bear market. I'm not rolling that out of the equation at all. I might be sounding a little bit more bearish in this video. I don't want to really come off as bearish because my base case remains the same. I'm still extremely bullish on the markets. I expect much higher. I just know that Fed rate cuts aren't necessarily the best thing, especially when you do have inflation sticking us between a rock and a hard place. But that's an interesting catalyst because when it comes to inflation, what is that bullish for? What's actually bullish for commodities, stocks, crypto, because that stuff is valued against the dollar. So if the dollar is devaluing, then that stuff is going to increase in value just inherently. So there's a lot of different factors that go into this. And like I said, the charts tell me higher, especially when you look at more of your risk on assets. Look at the Russell 2K backtest in this previous value area low of the 2020 bull market range within here. This signals that we're going to hunt value area high. And if we can hunt there, probably going to hunt higher and go on to actually make all-time highs for the Russell, which would signal a big move into risk on assets across the board, especially in your altcoin market, because the altcoin market is correlated with the Russell 2K, which is a conglomerate of your lower cap stocks in the stock market. Not only do your risk on assets look ready to go, but once again, like I was saying, weakness in the dollar, the DXY continues to hunt down here lower, making some structurally bad lows, probably going to break this stuff, and we could see some new macro lows here, at least lower prices than we've seen since all the way back at the beginning of 2022. Definitely possible here as we have tested this support 3 times. Usually when you test something 3 times, it goes ahead and breaks on that third tap. So since the dollar is inversely correlated with Bitcoin, this is another catalyst that gets me real excited and tells me not to worry, because even though we have the Fed cutting, there's so many different instruments at play that just need to be focused on the charts, and the charts are telling us higher is more likely. Everything is saying the upside is more likely. So while all possibilities are on the table, I'm putting my bets with the bulls. But we'll see what happens. It's going to be exciting times ahead of us. I can't wait for this Wednesday to see what we got on the charts. I might even be doing a live stream, so watch out for that. And then if you have any questions about anything I talked about, link to my Discord is in the description of the video. Also down below in that description is a VIP Discord. It's specifically for leveraged trading. It's not a signals group. I'm just trying to provide actual value, and it is a work in progress. So it's a discounted rate right now, 25% off. Just click the link, read more about it, decide for yourself if you think it's worth the money or not. And then also make sure to go check out those exchange partners down below as well. They all offer exclusive rewards and bonuses for those of you that use my referral links to sign up, so don't miss out on that. But with that being said, thank you all so much for watching, and I'll see you all in the next video.